a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about Bitcoin ETFs, which could be the biggest ETF story of 2024. And why the biggest ETF story? Because it has been more than 10 years since the Winklevoss twins filed for the first Spot Bitcoin ETF, and it seems after rejecting all the applications for more than 10 years, the SEC is finally getting ready to bless one or several of these Spot Bitcoin ETFs. And the approval could come this week by January 10th, which is tomorrow. And January 10th is actually the deadline for the SEC to take action on Bitcoin ETF application filed by ARK in partnership with 21 shares. And industry experts believe that the SEC will approve all eligible applications, about a dozen of them, on the same day rather than approving one at a time and then giving that unfair first mover advantage to that particular ETF. They are going to approve 11, 12 ETF applications on the same day. And so that's why we could see almost a dozen Spot Bitcoin ETF launch maybe this week or next week. It remains to be seen. It could, and these ETFs could be the most successful ETF launches of all time. Now, in anticipation of Spot Bitcoin ETF launch, these hopes started rising last year after BlackRock filed for a Spot Bitcoin ETF, and I had covered this issue then when BlackRock filed for Spot Bitcoin ETF, and then GBTC won its lawsuit against the SEC for conversion of its fund into an ETF. So Bitcoin surged over 160% in 2023, and it is up about 9% this year so far. But it is still below about $69,000, which was the record high touched in November 2021. Coinbase, which will serve as the custodian for most of these Spot Bitcoin ETFs, surged about 380% last year. And that is why the single stock ETF, leveraged single stock ETF on Coinbase, which is CONL, surged over 800% last year, and it was the best performing ETF of 2023. Then all Bitcoin miners and blockchain related ETFs also did very well. So that's why looking at the unleveraged ETF, this the Valkyrie Bitcoin miners ETF, ticker symbol WGMI, this was the best unlevered ETF for 2023 with a gain of about 345%. Now, why this could be the biggest ETF launch of all time, and why there is so much excitement about a Spot Bitcoin ETF? Because ETFs basically are going to legitimize crypto and make it more mainstream, like an institutional grade investment. And currently, not many financial advisors have allocations to crypto in their client accounts. They have been waiting for an ETF because ETFs provide very safe, very low cost and convenient exposure. So there are various ways of getting exposure to Bitcoin, but there are many, problems too. There have been issues like hacks, problems regarding storage, and then you have to have those private keys, etc. So it's not really convenient and it's not very safe. And it is expensive too. Trading crypto on Coinbase may cost about 1% for buying and selling. And talking about low cost, let's look at the fees that these ETFs are going to charge. So we saw this ETF fee for uh, starting yesterday. We saw many providers lowering their expense ratios on their proposed Bitcoin ETF, and this list, which I have compiled with the help of Bloomberg's reporting, and Bloomberg has been doing an excellent job. So if you want to keep up to date with all these filings and all their fees, follow Bloomberg. Uh, so let's take a look at these fees. So currently, Bitwise has the lowest proposed fees of 20 basis points, and they will waive the fees. They will charge no fee till the ETF gathers 1 billion or 6 months, so whichever happens earlier. Then ARK and 21 shares, they also have the same arrangement, zero fees for 1 billion or 6 months, and then 25 basis points. Invesco also has waived its fees for 5 billion and 6 months, and then 39 basis points. iShares also very aggressive, very low fees for Bitcoin ETF, 20 basis points for the first 5 billion up to a year, and then 30 basis points. And then you have other providers, everyone aggressively lowering their fees, and this may change in the next couple of days also, because this price war is getting aggressive, and this is really, really good for investors. Investors are the biggest winners in this ETF price war. Now, I also wanted to talk about ETF creation and redemption mechanism quickly without getting too nerdy on this, but since investors must have heard about these words like in kind and cash, and the SEC is allowing only cash redemption creation mechanism for Bitcoin ETFs. So let's quickly explain what this is. So ETFs have a unique advantages over traditional mutual funds, and that is their creation and redemption mechanism. So this process typically involves authorized participants, which are usually big banks. They are also known as APs, and those APs deal with the ETF issuer, and they play a very important role. They not only maintain the liquidity of that particular ETF, but also price and tax efficiency. So whenever the ETF's price deviates from the value of its underlying securities, that is the value of its NAV, these APs can create or redeem shares and ensure that ETF pricing remains very close to its NAV. So in case of cash creation and redemptions, authorized participants deliver cash to the ETF issuers in exchange for creation units of ETF shares. And the issuer will then use that cash to buy the underlying assets. So in this case, APs will give cash to the ETF provider, and ETF provider will use that cash to buy Bitcoin, and the reverse mechanism for redemption. In case of in-kind creation and redemption, APs create a basket of underlying securities, and then they exchange that basket with the ETF issuer in exchange for ETF creation units. So in case of in-kind creation and redemption, it is it creates a more tax efficient event. Mutual funds have to pay for mutual funds creation and redemptions are taxable events. For ETFs, they are not being in kind. So this cash, in case of Bitcoin ETFs, the SEC allowed cash creation and redemption, and that is mainly because authorized participants, or which are big banks, they are currently not allowed to transact and hold cryptocurrencies under the current rules. So Bloomberg again mentioned that Canada's spot ETFs use cash creation and redemptions, and usually their premiums over NAV are also not very high, usually as high, they can go as high as just 2% on time at times. So keep an eye on the expense ratio, keep an eye on the fee waiver for the first few months, and also keep an eye on the premium, if any, before deciding which ETF you want to hold in your portfolio. Now, I wanted to take a quick look at GBTC. So, GBTC's lawsuit against the SEC, that was one of the main reasons why these Bitcoin ETFs are being approved, because they sued the SEC that the SEC's denial to convert the Bitcoin trust into an ETF was not right, and they won that lawsuit. So we do not know whether that ETF conversion is happening along with these launches, or it will um, come later. But I was surprised that GBTC decided to lower their fees just to 1.5% from their current 2%. So I do not know how they will be able to compete with this kind of fee when providers are charging no fees for some time and then 20 basis points. So anyway, going back to GBTC. So GBTC is not an ETF. There is no spot Bitcoin ETF yet. It trades more like a closed-end fund. So it doesn't have creation and redemption mechanism, and that is why it can trade at a premium or discount to its NAV. Its discount was as high as 50% end of December 2022 and early January 2023, and now in anticipation of the conversion of the fund to an ETF, the discount has come down to about 5%. If you want to learn more about GBTC, you can go to the code page on Zacks.com, and using the link, you can go to GBTC's web page and learn more about what they are doing and when they are converting to an ETF and other details. Now, I also wanted to quickly cover BITO, which is currently the most popular ETF in the space, and in fact, its assets have surged to $2 billion. Now, this ETF was, when it was launched at the height of crypto frenzy, it quickly attracted $1 billion in 2 days of its launch. And the ones that came after BITO, they were not able to gather assets. And that's the main reason why the SEC is expected to approve many applications on the same day. BITO invests in Bitcoin futures, which have a roll cost, and that is the main reason that drag on the performance. That is the main reason why investors have been waiting for a spot Bitcoin ETF. This charges 95 basis points. Just imagine, so much more expensive than the fees that the current spot Bitcoin ETFs and the fee war that we are seeing now. So again, if you want to learn more about BITO, you can go to the code page on Zacks.com, read our articles, etc. Go to ProShares webpage for this ETF. I also did a podcast with ProShares some time back, so you can listen to that podcast. And hopefully, we will see a spot Bitcoin ETF very, very soon. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Also, make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.